In case you guys are planning to purchase Bitcoin just because you think it is back on its bull run, then make sure to watch our video till the very end. According to the co-founder of Huobi, which is one of the world's largest cryptocurrency exchanges, Bitcoin may not see a bull market until late 2024 or the inceptions of 2025, especially looking at the indications of past price cycles. Dujun revealed that Bitcoin bull markets are almost tied to a process called halving, which happens every few years. This relates to so-called miners on the Bitcoin network, which are running strong specialized computers to solve complex mathematical puzzles to verify transactions on the Bitcoin network. As a result, miners are also rewarded in Bitcoin. Halving is written into Bitcoin's underlying code and cuts in half the reward that so-called miners get for assessing transactions on the cryptocurrency's network. It happens around every 4 years. The last halving took place in May 2020 and in 2021. Bitcoin topped an all-time high above $68,000. A similar event happened when halving took place in 2016. After gaining these heights, Bitcoin started to tumble again. Currently, it's set almost 40% of its record high from November. However, it is still off some of the lows seen in January. The next halving event is planned to take place in 2024. Du has said that if this cycle continues, we are now at the early stage of a bear market. It is really hard to predict exactly because there are so many other factors which can affect the market, such as geopolitical issues including war or recent COVID also affect the market. Following this cycle, it won't be until the end of 2024 to the beginning of 2025 that we can welcome the next bull market on Bitcoin. The recent price drop in cryptocurrency has got some market players bothered that a so-called crypto winter or a long period of bearishness could be coming ahead. During such times, Bitcoin can also trade in a sideways pattern. It was easy to predict a $100,000 Bitcoin price last year, coming off its latest all-time high in November. With Bitcoin's big drop since then, the prediction game has become more complicated. The most extreme crypto cynics say Bitcoin will tank to as low as $10,000 in 2022. But another person believes that the cryptocurrency can still climb to $100,000 like many experts predicted late last year, just on a slower timeline. The most educated instructors in this field are predicting $100,000 Bitcoin in Q1 2022 or sooner. But now, bullish experts are re-evaluating the crypto industry totally as major corporations like Nike and other big brands are looking at different paths to monetize their commodities in the digital metaverse. The rise of metaverse games, worlds, products, and experiences is boosting the popularity of altcoins, which has transformed investors' emotions about Bitcoin. Many experts are uncertain to predict a number and a date, but rather point to the trend of Bitcoin boosting its value over time. Investors should predict a very sustainable rise in Bitcoin's long-term value driven by organic market movement, with a $100,000 limit in near sight. Normal economic factors affect the price of cryptocurrency just like any other currency or investment, including supply and demand, public opinion, the news cycle, market events, scarcity, and many more. As a new and rising asset, additional factors also influence Bitcoin's value more than the average currency or security. There are only 18 to 19 million Bitcoins in circulations, and coining it will stop at 21 million. Industry specialists often point out this built-in scarcity as a large portion of cryptocurrency's appeal. Experts also believe that Bitcoin has value because people give it value. This is really why everybody's buying it. It's actually because of the psychological aspect. This can make it hard for the average consumer to understand whether Bitcoin and other cryptocurrencies are valid or not. The whole theory of supply and demand only works when people want something limited even if it didn't exist. People often say that they have seen their crypto holdings reach millions at a time since they started investing in 2017, but they also saw them disappear in a moment. This is why certified financial planners suggest only to assign 1% to 5% of your portfolio to crypto and to protect your money from the volatility. One of the major factors running the price gains of Bitcoin is the rate at which new customers are buying and exploring cryptocurrency. Crypto technology is being accepted at a faster rate than the speed of humans who first adopted internet technology. Believing that it will continue, the compounding accelerations of new adoptions could keep rising the value of Bitcoin higher and higher. Bitcoin adoptions has been expanding at an annual rate of 113%. If people warm up to Bitcoin at a similar rate to that of the internet's early days or faster, the report makes the case that there will be a total of 1 billion users by 2024 and 4 billion users by 2030. According to reports, the number of new wallets were increased by 45% from January 2020 to January 2021 globally. to an estimated amount of 66 million. Famous crypto exchange Coinbase says it has now more than 73 million worldwide users, while fellow exchange Gemini recently published its State of US Crypto Reports, which found 21.2 million Americans own cryptocurrency of some type. Federal officials have made it clear that they are paying attention to crypto. Industry experts have recently credited what crypto insiders recognize as hawkish federal regulations being one key driver for Bitcoin's lagging price. Crypto regulations brings up a lot of unanswered questions. President Joe Biden also signed an infrastructure bill requiring all crypto exchanges to inform the IRS of their transactions. Similarly, Treasury Secretary Janet Yellen also said stablecoins, which is a type of crypto linked to the value of the US dollar, should be accountable for federal oversight. With a new asset class like cryptocurrency, any new regulations has the potential to impact value. When China restricted crypto in September 2021, investors saw the decline in the price of Bitcoin. However, it has since increased and resumed its usual volatility. Even though there's now about a decade of precedent for Bitcoin, the Securities and Exchange Commission is taking all judgments on a case-by-case basis in what experts refer to as its crawl, walk, run technique towards mainstream crypto adoption. Well, another major influence on Bitcoin's price is a cycle known as halving. It's twisted and algorithmic in nature, but in importance, halving is a step in the Bitcoin mining process that results in the price for mining Bitcoin transactions getting cut in half. Halving affects the rate at which new coins enter circulations, which can influence the value of existing Bitcoin holdings. Historically, halvings have been associated with boom and bust cycles. Some experts also try to predict these cycles down to the day after a halving event concludes. As with many investments, financial planners and other experts also advise you to not allow Bitcoin's price fluctuations to lead you to emotional decision-making. Studies have also shown investors who contribute regularly to passive index funds and ETFs perform better over time, thanks to a strategy called dollar cost averaging. This is why experts recommend not investing more than 5% of your total portfolio in cryptocurrency and never to invest at the cost of savings of emergencies and paying down high-interest debt. The road to long-term wealth and saving for retirement is most often profitable for people with various investments like low-cost index funds, with crypto making up a very minor part. And even with crypto, experts claim that a set-it-and-forget-it approach makes good sense. Passive investing is a very useful way to achieve financial goals. Since crypto is still new to most people, it's fine to wait and see how things unfold before laying your money on the line. We only have around 10 years of data to inform crypto price predictions, and the value of Bitcoin, while potentially climbing long-term, is highly volatile from day to day. Volatility makes it hard to realize the what and why behind your crypto policy. Before investing in Bitcoin or any alternative assets, you should ask yourself what you wish to achieve from your participations in this extremely unstable market. That will also help you in staying more focused. Financial planners don't have a tendency against cryptocurrency, especially if a client expresses an interest in learning about it. However, you should ask yourself whether you require crypto as part of your program. In most cases, the answer is almost no. You should favor simple paths of investing that are easy to understand. This will keep you on road for core financial goals and better positions you long-term for a strong retirement. What are your thoughts on these ongoing situations with Bitcoin? Tell us in the comments section below. With that being said, it's time to end our today's video. Press the like button and subscribe to our channel for more interesting stuff. Peace out.